As the deadline for the release of banks' earnings reports draws near, the attention of investors will be on the performance of the big five banks. Tijani Oladipupo, business head at Norrenberger Advisory Partners, joins me for this discussion. Tijani, thank you so much. It's a pleasure to have you on the show today. So far, 7 banks have released their half-year earnings. A couple have said, 1 or 2, I think that will be Access and Stanbic, have announced a delay in the release of their earnings. But of course, all eyes are on the big five. Talk to us about what market expectations are. These banks have a history of always delivering on the numbers, even in the pandemic year, 2020 to 2021. Previous numbers haven't been so bad, but talk to us about market expectations.
All right, thank you so much, Esther, for having me. In terms of expectations, I think the market is having a very high expectation. Speaking to the easing of the lockdown and on the back of improved businesses, we're hoping and expecting that even on the back of reduction in the NPL of the banks, the market is very open to see impressive performance on the back of their H1 results. Of course, if we look at the outcome of the MPC committee meeting, we saw the reduction in non-performing loans going to about 5.7 away from what the industry did in 2020. That was about 6.4. Even though this is still marginally above the Provident benchmark of 5%, I'm sure that we're very hopeful, and I know that the market is very expectant and very positive, significant growth in earnings.
Now, while the pandemic and particularly the lockdown of last year affected all businesses, at least most businesses, banks are included, what do you think, or what are those factors you think will separate the winners from the losers? We're not expecting anyone to come and declare a loss, but just those numbers or factors that will separate the winners from the losers.
Obviously, quite a number of factors. For instance, if you look into the direction of those who are able to tap into the opportunities of fintech, in the fintech space, for instance, around the agency banking, the payment collection, financial inclusions, some kind of hold cost structures, the ability to manage their costs. On the back of these and quite a number of variables, you can see what happens in the results of Wema, hinging their H1 profit as high as 149% increase. You can see how much value they've created in terms of driving operating income higher. So quite a number of factors, in addition to these I've mentioned, of course, will separate the hope of expectations.
Now, Tijani, that being said, I'm sure bank CEOs, the recent rise of fintechs, or the activities rather of fintechs, the likes of Kuda Bank, Flutterwave, just the whole fintech community. I'm sure that that has given bank CEOs something to think about in terms of their operations, in terms of innovation around their own digital platforms. And these banks who are operating as microfinance banks, and how they're tapping into the very large population of the unbanked. Just talk to us about how this is evolving, how banks are also evolving along with this trend.
Obviously, Esther, thank you. On the wake of the old core structures that banks are putting up now, there's a lot that's going to happen in the next months to come. We've seen these banks and the likes of GT in recent time putting up the old core structure. So, of course, we see that. We're waiting to see that as opportunities for these banks to majorly take positions in this space. There is no gainsaying that, yes, the market is in for a very competitive one. So basically, you see a situation where, of course, we've seen how large the micro market is. So the banks who have already seen these opportunities once again are similar to what happens in the era of universal banking. So we're expecting a lot in that regard, and that's what bank CEOs are positioning themselves inside of strategy in the market.
Okay, speaking about strategy, for the bank's loan book, I know that has been a sticking point for banks. Many of them have played it safe, been very conservative. About a year or two ago, we were talking about a loan book of somewhere around between 8 or 10%, still playing in the traditional sectors that they're used to, they're comfortable with. What has changed in that area?
of course, quite a lot has changed. We could see that practically all the banks about the 7 banks that released the H1 results. You can see a significant drop in their NPL, with the exception of Union Bank. So obviously, that has also affected what we hope to see under the tight prudential regime. So we see that on the back of the provision for employment losses reducing, that of course is also expected to injure on the performance of the bigger banks. So what's so to say in terms of what to also expect? That has happened, and of course the CBN is also expectant to see that this bank can ride on the back of this reducing NPL to declare higher earnings.